Nature and types of white-collar crime. The most common white-collar offenses include antitrust violations, bankruptcy fraud, bribery, computer and internet fraud, counterfeiting, credit card fraud, economic espionage, and trade secret theft, embezzlement, environmental law violations, financial institution fraud, government fraud, healthcare fraud, insider trading, insurance fraud, intellectual property theft, piracy, kickbacks, mail fraud, money laundering, securities fraud, tax evasion, phone and telemarketing fraud, and public corruption. Different forms of white-collar crimes are narrated in Section 9 of the National Accountability Ordinance, 1999, under the definition of the offense of corruption and corrupt practices. 1. Receiving of gratification by a public office holder. 2. Acceptance of any valuable thing without consideration. 3. If the public office holder dishonestly or fraudulently misappropriates any property entrusted to him. 4. Unlawfully obtaining any property valuable thing. 5. Getting of pecuniary advantage and pecuniary resources disproportionate to his known sources of income, being a public office holder. 6. Accused under the National Accountability Ordinance, 1999, if he misused his authority to gain any illegal benefit. 7. Issuance of SRO, statutory regulatory order, to grant concession benefit in any taxation matter, etc. 8. Offense of willful default. 9. Offense of cheating and dishonestly inducement to the members of the public. 10. Offense of criminal breach of trust against the members of the public at large. 11. Offense of criminal breach of trust by a banker, merchant, factor, broker, and attorney or agent. To be precise, main types of white-collar crime include 1. Embezzlement, the taking of someone's property by a person with whom it is entrusted. 2. Larceny, involves taking someone's property without paying for or returning it. 3. Extortion, illegal use of one's official position or powers to obtain property, funds, or patronage, also known as blackmailing. 4. Fraud. This often includes but is not limited to healthcare fraud and tax fraud. 5. Price fixing, an agreement between two parties to set prices for a certain product, thereby violating free market operations and rules of the Competition Commission of Pakistan. 6. Racketeering, the extortion of money by force or a pattern of criminal activity committed to further the interests of a criminal syndicate. 7. Computer fraud, using a computer or technological devices to commit a crime. 8. Securities and commodities law violations. 9. Bank fraud, to engage in an act or pattern of activity where the purpose is to defraud a bank of funds. 10. Racketeering, the operation of an illegal business for personal profit. 11. Tax evasion, when a person commits fraud in filing or paying taxes. 12. Bribery, when money, goods, services, information, or anything else of value is offered with intent to influence the actions, opinions, or decisions of the taker. You may be charged with bribery, whether you offer the bribe or accept it. 13. Cellular phone fraud, the unauthorized use, tampering, or manipulation of a cellular phone or service. This can be accomplished by either using a stolen phone or where an actor signs up for service under false identification, or where the actor clones a valid electronic serial number, ESN, by using an ESN reader and reprograms another cellular phone with a valid ESN number. 14. Cybercrime, where computer hackers steal information sources contained on computers, such as bank information, credit cards, and proprietary information. 15. Insider trading, when a person uses inside, confidential, or advance information to trade in shares of publicly held corporations. 16. Insurance fraud, to engage in an act or pattern of activity wherein one obtains proceeds from an insurance company through deception. 17. Investment schemes, where an unsuspecting victim is contacted by the actor who promises to provide a large return on a small investment. 18. Kickback, occurs when a person who sells an item pays back a portion of the purchase price to the buyer. 19. Larceny theft, when a person wrongfully takes another person's money or property with the intent to appropriate, convert, or steal it. 20. Money laundering, the investment or transfer of money from one country to another, mostly earned through other white-collar crimes and other crimes like from racketeering, drug transactions, or other embezzlement schemes, so that it appears that its original sources either cannot be traced or is legitimate. 21. Telemarketing fraud, Actors operate out of boiler rooms and place telephone calls to residences and corporations where the actor requests a donation to an alleged charitable organization or where the actor requests money up front or a credit card number up front and does not use the donation for the stated purpose. 22. Welfare fraud. To engage in an act or acts where the purpose is to obtain benefits, i.e., public assistance, food stamps, or Medicaid from the state or federal government. 23. Weights and measures. The act of placing an item for sale at one price, yet charging a higher price at the time of sale or short weighing an item when the label reflects a higher weight. The fraud mentioned in the preceding paragraph requires particular expertise in each of the categories. For example, the corporate crime has the potential to cause significant financial losses. Corporate fraud can cause immeasurable damage to the economy and investors' confidence. The investigators have to focus their efforts on cases involving accounting schemes, self-dealing by corporate executives, and obstruction of justice. The objectives could be achieved by including the specialists of the field into the law enforcement units.